What's going on, y'all? Welcome back to the Mining Pod for this week's news roundup. You've got the trio here, Colin, Charlie, and Will. Fellas, how are we doing on the eve of Christmas week?
I miss Matthew.
I miss Matt too, but I will be here in his stead. I don't know, I'm getting jerked around here because we just hit 100K, and then we go back down under 100K, and then we go over 100K. So how many bottles of champagne do I have to pop? Please pick a side.
Well, I don't know. You're the one getting jerked around, so you tell us how many you need to pop.
I don't know. I just wanted to stop. Pick a direction, guys. ETF, either buy or sell, please.
Yeah, a quick kind of micro flash news item. Bitcoin retreating from 107K to 98K on the eve or the day after the Federal Reserve meeting, where Jerome Powell said that we are not going to increase rates potentially in January, and the market freaked out, or we're not going to lower rates in January, and the market freaked out. It's funny, I actually saw a CoinDesk headline from Omkar Godbol, their market analyst, saying that the Fed is now hawkish because of this, and I find that really funny because it's like you're just pausing anything. You're not actually increasing rates. This is where we are at. The Fed is hawkish when they decide they're just going to sit on their hands. But
yeah,
anyway.
They cut rates by 0.25, but then they're not going to do more rates next year. They said at least I think through January they're not planning on cut. It's just so funny. It's like then the market's throwing a tantrum even though they still cut rates by 25 bips. I don't.
And
really
this is the first year I think that you can't tax loss harvest your crypto. So we're SOL right now.
Oh, we need to do a show on that. That would be really good, especially around tax day. But anyway, we are not here to talk about the Fed as much as we would like to. We are here to talk about some Bitcoin mining news. So for today's show, we've got the difficulty update as usual. We've got the Cango news that Blockspace broke, the newest and one of the largest public miners out there by self-mining hash rate. We also have some really interesting news about Halliburton partnering with an oil and gas miner. Very big. Honestly, kind of amazed that this has flown under the radar. I mean, the press release was dated just a few days ago, but even still, this to me seems like a pretty big story. We've also got some news on Hut 8 and Marathon's Bitcoin buys. And we have an update from a story we published last week on a Rhodium lawsuit. And for this week's Cry Corner, everyone's favorite topic this week, the Strategic Bitcoin Reserve. But first, a word from our sponsors.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to The Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
All right, and we're back. I'm going to share my screen here to get up mempool.space. Mr. Mempool Weatherman, what are we seeing out there in the forecast?
That's me, your local mempool weatherman. Well, the mempool is quiet right now. It's ticking along at single sat per VByte median fee rates per block. Sometimes we'll get a spike into the low teens. This comes out to be about 0.1 Bitcoin in fees per block, or about $10,000. 0.1 Bitcoin is more than it used to be this time last year. And we're seeing, I mean, if you want just some observations, Foundry is now at 33 or 34% total blocks produced, which is a little bit of an increase, I think, from where they were over the past few months. Antpool losing a bit of ground in this overall block share, if you will. Also, difficulty we've had a couple upward difficulty adjustments. Right now, we're, in the first half of the difficulty adjustment and projecting a slight downward difficulty adjustment of like 1.3, 1.4% downwards. But that, that'll change. We're only a few hundred blocks into 2,000 blocks of difficulty. So, another observation about just what are people transacting? Well, you'd be surprised, even though all of your fun side projects of your meme coins and your runes and your ordinals, those prices are down in Bitcoin denominated terms, they still make up occasionally the lion's share of transactions on Bitcoin, anywhere from 30 to 50 to 55% of transactions by gross amount on Bitcoin. So interesting to watch here as 100K, as we flip back and forth between 100K, like not a lot of transaction activity. And if we could compare this to like where we were in previous cycles, this time 30, 40% above the previous all-time high, we are lagging in like overall transaction activity compared to where we were in 2020 and 1 and 16 and 17. So it's just some kind of cursory observations there.
Yeah, and interesting in the sense that we are not seeing as much trading activity within the Bitcoin tokens ecosystem and runes and ordinals and BRC20s, right? I mean, there's some stuff going on, but it's almost like, and this is intuitive, I actually think in 2023, you had people were trading these things because Bitcoin was not having these meteoric swings upward, right? So they were looking for yield and return somewhere else. So of course you trade coins. Now, traditionally, when in bull markets, you have these kind of swings where Bitcoin surges and then it corrects a little bit and people rotate into alts and shitters and then they rotate back into Bitcoin. I think we've seen that more with Solana meme coin meta though.
I think this will continue. It's going to be the cyclical back and forth. If you're familiar with the famous like chart of crypto cyclical flows, Bitcoin to ETH to alts to meme coins, I expect we might discover something similar like that within just the Bitcoin ecosystem. And that'll probably reflect in on-chain activity. So remains to be seen, but this will, not a whole lot happening at the current time.
Not all happening right now, indeed. And don't worry, guys, this is not going to become a trader's show. We're not going to do TA and draw lines on meme coin charts. We are going to go back to covering the news, which includes perhaps at least the biggest story for us, if we can toot our own horn.
Can it go higher?
Can go higher. Indeed. So this is an interesting little tidbit. A Chinese car company that booked 3.8 million in revenue last quarter just became the third largest public miner by self-mining hash rate after a deal that it closed with Bitmain for turnkey units and facilities across the US. One of these facilities is probably in Georgia, according to filings, because of the subsidiary that they brokered the deal with was Bitmain Georgia Limited or something like that. We don't know for sure, though. They didn't actually disclose where the locations are, but Cango has 32 exahashes of hash rate under management now. Again, it purchased these units from Bitmain for about $256 million in cash, and it has another 18 exahashes under contract with a company owned by Bitmain's former CFO, Max Hua. So if it gets that 18 exahashes, which is projected to close in March 31st of 2025, that's the end date. That's the longest that the contract negotiations will go. They'll be on par with Marathon and will be one of the largest public Bitcoin miners by self-mining hash rate. So pretty crazy to see this just come out of the woodwork. To me, it's a reminder that in Bitcoin mining, the biggest stories are the ones sometimes that you didn't even expect to come down the pipe. And it's also a good reminder that you never know which companies are going to get involved with this. You never know which companies are lurking in the shadows, fixing to sling a bunch of hash rate. I'm trying to see if there are any other like notable tidbits here. Yeah, for the 18 exahash deal, that will be an all stock transaction worth 144 million. I think one of the biggest questions for this is what is going to be the, what will the equity pool be? Who will own what shares? How much is Bitmain involved in this? And will they actually have a seat at the table through proxies or through, loyal team members who have jumped ship to other companies? But Will, I don't know if you have anything to add to this.
So we broke this news, which really, also the Miner Mag also wrote on this as well. So the two of us kind of broke news on this Tuesday night. And this story had been circulating in Chinese media for about a month. And a lot of the wires had picked it up in English speaking publications. So like your Financial Times wires, things like that are more automated. And you can see that people were adding to the position with their stock price and the market cap going up over the last few weeks. But then when the news sort of broke on crypto Twitter via us and MinerMag, like the share price just spiked, wicked up to 950. And then since then, we saw that the two co-founders of Cango went and sold a bunch of stock, and now it's back down below entry for a lot of people who decided to purchase this after the news broke. So it can go lower as well. I think this was a fun story for us because we have been monitoring this S19XP glut that has been in the market for a while. Colin wrote on this in August, and there's pieces and podcasts going back quite a while for us on this topic, where we know that in the southeast of the United States, Bitmain was creating these contracts to dump S19 XPs. They made a bunch of these. The market went south. It was a bear market. No one was buying units. And Bitmain decided to start mining with them and building out sites. Fast forward 2 years, these units are still competitive. Like, they still make money if you have a good power contract. But apparently they don't want them anymore. And so they flipped it into this company. Now, we have to ask ourselves a few questions, which is what I want to get to with you guys. Like, the news here is interesting, right? To have like this company emerge with so much hash rate and be only behind Mara and CleanSpark for the moment. But there's also questions around like, why is the ex-CFO of Bitmain included here? And is he the ex-CFO? Because it's only claimed in the filings, but we don't see anything on Bitmain's websites that he is the ex-CFO. What's the relationship with Bitmain? Is it just a broker relationship where they sold the units and that's it? Or is there more to it? One piece of commentary we got from someone in the industry who's an analyst was, is this Bitmain's way of spinning off certain parts of its business into other entities that are US based, so it's able to protect itself and gain more exposure to the US markets? Bitmain's tried to go public in the past. It tried to IPO in 2018 and that failed. I believe that was in the Singapore markets or perhaps the Hong Kong markets. They're the largest Bitcoin mining company in existence. And the fact that they are not public when a lot of their peers are, the people I sell to, is, I think, unfortunate in terms of just knowing what's happening with Bitmain, but also probably not great for Bitmain as well, because they're not able to de-risk the profile of the company as well as some of the others, and they're not able to continue to expand with public markets. The last thing I'll note here, I want to get your thoughts on it, is we now have like a lot of proof with this that Bitmain is mining against the people that sells machines to. 50 exahash in these deals is going over. 32 exahash for the first part. The second one's in the other entity. It's a lot of hash rate that Bitmain is producing for others that sells to, and then immediately turns on itself and increases difficulty, decreases revenue for other miners. Charlie, as a miner, do you have any thoughts on that?
I'm a miner, but these type of things, these types of curveballs, which are very impactful across the industry, are like virtually impossible to predict. You can just say they're probably going to happen. And until you have somebody on the inside of Bitmain, it's going to be hard to predict. I mean, my thought is Kang, total market cap of under $500 million, second or third largest miner by hash rate. You look at like what Cango is like compared to the other major markets, like other miners, like this is multiples below that. So when are the kangaroos going to bull post on Twitter? That's what's on my mind. Otherwise, you don't really want to be competing directly against Bitmain if they're also in the mining business. Yeah.
On the note on the share price, all else being equal, it's extremely undervalued compared to what other miners are currently in terms of their hash rate and their EV hash rate ratio, which we put in that article. Just one note about the Bitcoin or Bitmain mining against other miners. This is something that's been going on since Bitmain's existed, right? It's been going on for years.
Yeah, this is nothing new, that's for sure. It's just out in the open now.
Yeah, I think that's the interesting thing too, is how it's becoming more public, maybe through things like this, or also just seeing how Bitmain has been able to adapt and build and open up facilities in the US, right? That's the other thing I'm unclear about this, is Bitmain doesn't actually own the facilities which I think is interesting. At least that seemed to me to be the case based on the filings. They were hosting these machines and they manage the facility, but they don't actually own the facility. So I think that's kind of interesting. I'd be curious to see who else is in the chain here, right? Like what other middlemen do we have? And with regards to why this is happening now or what this means, I can't really tell you. I do think that the idea that maybe Bitmain trying to do some sort of reverse takeover and like have proxy companies go public or, just have public exposure through proxies that they tangentially control, but don't like control on the face. It could be at play here. I also think there might just be an argument to be made that they saw an opportunity to pump the stock price of basically a zombie company. And, it's financial games all the way down, right? And if they have the ability to profit off of this, they're going to do that because they're pretty savvy. So we'll be definitely keeping an eye on this and updating our reporting as needed when and if this 18 exahash deal goes through. Because again, just to reiterate, if Cango does secure that by March of next year, it'll be one of the largest miners. I mean, other miners will probably have expanded their hash rate by then, but just a crazy thing to see coming out of nowhere. Okay. On to the next story that we have, which, courtesy of Mr. Spears, bringing this to our attention. Charlie, what the hell is Halliburton doing, and why does it relate to Bitcoin mining?
Yeah, this is also kind of another funny thing in that it's a story which has been circulated in certain media, but not really crossed over into the mining world. I think it's because the name Halliburton doesn't really mean a whole lot to people outside of oil and gas for some reason. And Halliburton is the second or third largest, depending on where you are, oil field service company in the world. And they're big, they're giants in the US. They're noted by their big red trucks. You might call them Big Red. And what an oil field service company is, in contrast to a producer who owns the wells and produces the wells and produces the oil, a service company is in the business of providing these services to drill the wells. So they will typically be contracted by these producers to do all the services around drilling well, namely hydraulic fracturing, wireline, generation. And so this is Halliburton is like the name. I've talked about them as being like, when we talk about this idea of putting Bitcoin mines out into the gas, out into the oil field, it really makes more sense for a company like Halliburton to do it. And what we're seeing is their R&D arm of the company, it's called Halliburton Labs, is partnering with a notable oil and gas Bitcoin miner, Chris Alfano, and 360 Mining. So Halliburton Labs adds 360 Energy to bring a new market for, quote, natural gas to the oil field using in-field computing technology. What's interesting is that, as many of these press releases do, they don't mention Bitcoin. So 360 Energy is in kind of a new suite of partnerships with companies typically on the edge of tech and R&D in the oil field. And 360's got a few sites in Texas, I believe. I need to verify that, but they've I believe have a good history of operating, and it looks like they will get to add to their partnership list Halliburton. That is kind of like the end goal of Bitcoin mining and the oil patch partnerships.
Yeah, and just to add some color to this, thank you for that breakdown, Charlie. They are based in Texas. They have a number of sites. They've got about a quarter of an exahash. I think that their services thing here says at 285 petahash. I also really like this on their they brand it as data centers, which I think is palatable to mainstream investors. Maybe this is becoming less of a problem, but in the past, historically, if you said that you were doing anything with Bitcoin mining, no one wanted to touch you unless they were savvy enough, right? No one wanted to fund you. What I think is really funny here is as consistently outperforming traditional gas markets, 360's in-field computing data center versus Henry Hub. And this chart here for the revenue per MCF is basically just an extrapolated hash price.
Yeah.
And you can see all of the movements from the past bull market. You can even see the halving right here, right? Looks like about April, and it just tanks, pretty precipitously. But a really interesting story, I think, and another reminder that in the background, a lot of energy companies are starting to think about Bitcoin mining. And some of them are already doing it and some of them are already mining it, but they're just not going to be public about it because it's not fashionable. And it also carries, even to this day, carries a little bit of risk with investors and reputational risk.
And I think I've made various comments like this before. Like there is a narrative, like the ESG narrative and the flare reduction narrative that Bitcoiners like to put out there. And I think that's a great one. I endorse that. But I think the oil patch is probably much more pragmatic and looks to fit this type of data center into the business of unlocking assets which are not as profitable. And I think that's really where the sweet spot is for the time being, is there's a lot of inefficiencies because it's difficult to transport or respond to variable price conditions. And so what a Bitcoin mine does, it gives you a different market that you can consume kind of anywhere. And that is a very attractive, to the right type of energy producer.
Just for context, because I'm looking this up and I'm one of those people, Charlie, who has no idea what Halliburton is.
How do you not? Okay, hang on. Really?
I've heard of it, but I don't know.
This is a man who didn't live through the Iraq War. He wasn't.
I was about to say, Halliburton, the CEO is Dick Cheney, and famously during the wars in the Middle East, Halliburton built all of the infrastructure for the U.S. military, like the bases, like they had KFCs. Like, I'm not kidding you, in Afghanistan and shit like that.
Yeah, but regardless, they are like they're
the second largest
second
company in the world, second
to Schlumberger. So it's probably Schlumberger, Halliburton, either Baker Hughes, BJ Services, or Weatherford.
Yeah,
so I mean,
$4 billion in operating income last year,
yeah.
$23 billion in revenue.
Yeah.
So for 360 Mining, like they're one of the more successful oil service companies out there. We've talked with Chris on the show. I don't know if we ever did anything more with him. We should definitely reach out and get a show proper with him on this.
100%.
They're doing some innovative stuff in one of the larger oil and gas service companies out there for Bitcoin mining, and they do things at conferences for sure. I'm wondering what this entails. It seems like there's 4 other companies that were included in this, and it does look like Halliburton sort of runs these internal startup-esque little incubator things, and that seems to be what this is.
Yeah, it seems like R&D, like Charlie said, for the labs component.
Yeah, but R&D going into a bull market with an operator who's got a good track record, that's the kind of incremental, affirmation our industry needs to actually build at scale off grid in the oil patch.
You heard it here first. We need Dick Cheney to pump our bags. The strategic Bitcoin reserve be damned.
Whenever we're sending Bitcoin miners out to wherever the U.S. decides to send troops, that's how you'll know we've made it.
Let's go.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com. All right, moving on to more bag pumping news. Will, what are Mara and Hut 8 doing, and why are they basically becoming like MicroStrategy?
Oh, what are they doing? So yeah, they're buying a lot of Bitcoin for sure. Mara has bought $1 billion worth of Bitcoin, and Hut 8
$1.53 billion.
Yeah, it's nuts. And Hut 8 followed up this morning and added some Bitcoin to its balance sheet and brought the total Bitcoin on its balance sheet to equivalent of $1 billion USD. So these headlines just keep flashing across Twitter for people. And if you're not really paying attention, you're hearing it now on the podcast. We did the show with CleanSpark, and that's where we
got a good understanding of how this functions, this convertible note, basically you're taking out a debt instrument with some favorable terms for both the company and investors, and you're using that for some sort of purchase, whether that be purchasing back shares of your company like CleanSpark, purchasing Bitcoin, purchasing other stuff. And it's a nice vehicle if you are of a certain size to take advantage of a hot market, right? Add more assets to your balance sheet right now when everyone is being rewarded for buying Bitcoin or being associated with Bitcoin. So I think that's why Mara, Hut 8, these others are doing it. Only a few companies are really able to do that. I've seen a few Bitcoin companies being like, we're now denominated in Bitcoin as our treasury. And it's like, that's cool, but that's not really like what's happening here with these big guys. Like these big guys are taking out fiat debt, and there's an equity component to all of them at some point, depending on how the note is structured. And they're using that to buy Bitcoin in what Pierre Rochard and others have sort of labeled like a speculative attack on the US dollar, where you're saying like, my Bitcoin is going to keep going up over a time period against the US dollar. So why not leverage myself against it? For Bitcoin mining companies, the question, of course, is like, why would you do this when you can just mine Bitcoin? CleanSpark has taken that bet on itself. They mined Bitcoin for like around $40,000 all in. And so they're like, hey, why not just mint it at a discount? That's the purpose of a Bitcoin mining company. These other Bitcoin mining companies are saying, we're being rewarded for having more Bitcoin on our balance sheet. Why not just add to it and use one of these notes that doesn't dilute immediately or necessarily ever and has a very notional or small interest rate, if at all. A lot of Mara's interest rates have been 0%. CleanSpark's was 0%. I didn't see the Hut 8 interest rate, but I'd be surprised if it was large at all.
It's probably pretty low.
That's what's happening. That's the T.
Yeah. So the kind of just a few ways or a few avenues to go here is like, why is this happening now? And why do this rather than just mine Bitcoin? Harry Sudock was on What Bitcoin Did last night, or the episode was released. Shout out to Danny Knowles, doing a great job rebooting that. It was really, really great to see as Peter takes on the world of general purpose podcasting in Bedford in London. But Harry was on and he was answering the question, why is this happening now? And a lot of that has to do with the fact that these companies are now more mature. They're multi-billion-dollar companies. Investors and banks are getting more comfortable with giving them capital, and they're okay with structuring these instruments that they didn't normally have, right? And these convertibles are in some ways better than what they've done in the past to raise money. Usually they just do an at-the-market offering where they sell shares on the open market. And that is potentially more dilutive depending on how the notes are structured, because with these convertible notes, you're taking on debt, and then at a certain point in the future, the lender either calls that debt and takes cash, or they convert the debt to shares of the company and then sells them on the open market, or holds them, right? Probably sells them to cover the debt. So I think this is really a sign of where we are in the cycle, in the sense that you have multiple companies leveraging this vehicle to raise money in ways that they wouldn't have been able to do a few years ago. Now, then there's the other questions like, why would you do this instead of just mine Bitcoin or invest in infrastructure? I think two things. One, there's an opportunity cost where you can just buy the Bitcoin now and then get a massive premium on your stock based on your Bitcoin stack. That's the MicroStrategy strat, and in some ways, as Penny Ether said on a live stream that we did a while back when we were covering Mara's Q3, I was kind of criticizing this. I was like, you're a commodity producer, produce the commodity. Why are you buying it? This is stupid. And Penny said, this is the smartest thing Mara has done all year. And also worth pointing out that some of the producers doing this is not totally true, because Riot has a pretty low power costs, all-in power costs. That being said, their uptime has suffered. But if you look at Mara doing this, they have one of the highest operating costs in the game. So this actually in some ways allows them to produce Bitcoin for a cheaper rate dollar-wise than they would otherwise just trying to straight up mine it. Right. And I think that the second thing is there's almost just like and then this ties into the first one. There's like a limit to there's physics in play here. Right. And there's infrastructure build out. Like you can't just spin up mining operations out of nowhere. And so it's like you're doing this because you can produce more Bitcoin through this vehicle than you otherwise would, given the timeline that it would take to spin up a mining facility. That being said, if I'm investing in these stocks, I don't really want a proxy Bitcoin play like MicroStrategy. I want a company that is going to produce Bitcoin reliably below spot through their operations. So, obviously, disclosure, they're a sponsor of the show, but I really like listening to Harry on What Bitcoin Did. He made this argument where it's like, we're trying to build the best Bitcoin mining facilities possible. And I like that focus in the sense of like, yeah, like I'm not investing and I don't hold any of these companies, but if I were an investor, I'm not investing in you so that you can go MicroStrategy, Michael Saylor, Giga Chad hoarding Bitcoin. Like I'm investing in you to produce a commodity, right? And so I would rather see them take this and invest it in infrastructure personally.
Well, I mean, what's the other stated purpose of publicly traded companies? To increase the share price. So
that's true.
It's very effective at doing that. And so this quickly becomes a very ontological discussion.
Yeah, it really does, right? It's like, what are these companies at all? Like, what's their purpose? And
that's not what we're here to discuss.
No, we could have a philosophy of Bitcoin business podcast at some point, but we'll move on to another story that we broke last week, which is investors are suing Rhodium for alleged fraud related to the Whinstone hosting deal.
Yikes.
Ouch. So nearly a dozen investors are suing Rhodium Enterprises, which filed for Chapter 11 bankruptcy back in August. We also broke news on that story. In the midst of all of this, they're now being sued by a bunch of their former investors. And the basic idea is that when these investors put money into Rhodium, they are alleging that Rhodium withheld key information about Whinstone's sale to Riot. Back then, Whinstone was owned and operated by Northern Data. I believe back then it was still called Northern Bitcoin. And it was selling Whinstone to Riot platforms back in, I believe that was 2021 and or 2020, 2021. And Rhodium had all of its fleet basically hosted, maybe not all of it, but a significant portion of its fleet hosted at Whinstone. And these investors are saying that Rhodium team withheld information on that sale at the time of investment. There are text messages between Chad Harris, who was the operator and the project manager of Whinstone, with the Rhodium team basically talking about the sale. And these investors are saying that information should have been disclosed to them before they made their investment because it would have impacted their decision. And in the background of this, Rhodium and Riot have had their own litigation about the hosting agreement, all this other stuff. So pretty messy situation, trying to see if there's anything else. Yeah, Rhodium tried to IPO back in 2021. They scrapped that. The plaintiffs in the case are seeking monetary relief, that monetary and non-monetary relief, the former of which far exceeds $1 million. So pretty juicy story. I don't know if you gents have anything to add here.
Let's talk about those text messages. So basically, they have on the record that the sale occurred. The executives at Rhodium heard about the sale directly and immediately texted Chad, who was running the site for Whinstone, became Riot, and we're like, should we tell our investors? And they're like, maybe not. It's like, this is so material. This is material information.
Here are the texts between one of the defendants, Nathan Nichols, who is
he was CEO and co-founder.
CEO and co-founder, thank you. And Chad, Northern Data is selling to Riot. Nathan, oh shit, you called it. Nathan, is it cool to tell the partners? Chad, tell your guys, but stop it with Chase, Cameron, and Nick, which are other Rhodium co-founders and executives. Chad, they said yes to 19. I guess that's the selling price, 19 million or something. I don't know. Nathan, will do. Nick and I will come over in 45 minutes to discuss if you're available. So these are text messages from December 2020,
yes,
before or during the time of investment, allegedly.
To be clear, Chad was not with Rhodium. And so why this matters is because later there was a big dispute between Rhodium's presence on the campus, the Rockdale campus, where they were being hosted there. They wanted to take advantage of some of the energy credits that Riot was generating. Riot wanted them, of course, because they own the site. And then last year, I believe it's like October, November, this time last year, Riot personally escorted a lot of the Rhodium team members off site with security personnel. And that was first reported in Bitcoin Magazine. And that blew a lot of people's brains out. So I was like, this has been a very contentious relationship. At the end of the day, if it's not your key, it's not your coin. If it's not your rack, it's not your ASIC. And this is just the same story on a larger scale, but with a lot of investors who got blown out because they were hosting with essentially a third party. And the contract was probably better for Riot to hold than it was for Rhodium. Brutal, total brutal story all around.
Not good.
Not good.
We do not like to see it. And we'll probably do some follow-up reporting on this depending on what happens. I don't think we'll follow it super closely, but maybe when there's a decision, which Lord knows how long that'll take. It feels like litigation stories like these, you think that it should be quick, and then it ends up being like a year or two later, and then you finally get something.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Ladies and gentlemen, perhaps the biggest chirp and chatter to come out of Bitcoin Twitter in a while, Bitcoin Strategic Reserve and the merits or demerits therein.
SBR.
So I just wanted to choose this for the Cry Corner this week, not necessarily taking a side, but because I think both sides are crying their eyes out over either hating this or loving it. And I think that this tweet from James, we always mispronounce his name, James O'Byrne. Sorry, James, if you're listening to this. He's a Bitcoin Core developer, unaffiliated with any company. Shout out to that. That's kind of based. We love to see that. But he's basically saying that he's been tweeting all week saying that the Bitcoin Strategic Reserve or Strategic Bitcoin Reserve would be a mistake. It's completely antithetical to the values that underpin a lot of people's belief in Bitcoin and the whole concept of demonetizing the dollar and disintermediating the state's power over currency issuance. Obviously, David Bailey, CEO of BTC Inc., and the owners of Bitcoin Magazine, has been at the forefront of this discussion. A lot of people, including Udi Wertheimer, have kind of, bestowed him the title of Trump Orange Pillar. He's been the person at the forefront of a lot of the discussion about Bitcoin with the Trump campaign. Obviously, Trump was at Bitcoin 2024, and David is a huge proponent of the Bitcoin Strategic Reserve, also claiming that this is going to happen sooner rather than later, claiming that it's just a signature away. Who knows what's going on in the background here, but wanted to open it up for discussion. What do we think about the Bitcoin Strategic Reserve? Well,
there's two topics here we could pick for the Crack Corner. One is SBR good or not? Nick Carter and a few other people have said it is bad. We have this tweet from James. And then we have the other side of the hall saying it is good for Bitcoin. And I think it comes down to how do you see Bitcoin? Do you see Bitcoin as number go up technology that is just going to free a lot of people from years of enslavement behind a desk? Or do you see Bitcoin as more than that and you don't want it to be within the clutches of government? The other story here, however, is also who broke the SBR story in Texas. And then lastly, the SBR framework, which was put out by Bitcoin Magazine's Bitcoin Policy Institute, which I believe there's a connection there. So
I don't think so. Maybe they fund it, but I don't think it's its own thing.
David's like certainly tweets about it a lot. And like, I know there's some people who used to be at Bitcoin Mag who are there.
Yeah. So David Zell and I think Grant McCarty both used to work at Bitcoin Magazine in this like policy, or BTC Inc. in this like small policy desk. And then they decided to go off and do their own thing. So I'm sure that BTC Inc. probably funds them, right? They probably have donated to it.
A little speculation on the mining pod, but perhaps could be true. Regardless, the point that I want to get to is Satoshi Action Fund put out a similar SBR within 60 minutes of the Bitcoin Policy Institute putting those out. And now there's both sides are saying that the other like jumped the gun on it, and like Satoshi Action Fund used like ChatGPT to rewrite Bitcoin Policy Institutes. And there's just like this.
Whoa, okay. I did not hear that. That is an incredible accusation.
So basically, Bitcoin Policy Institute put this out, tweeted it, went viral, and then Satoshi Action Fund put theirs out, 2 hours later. And the language looks pretty similar. And so then immediately Bitcoin Policy Institute folks and friends said that they just ripped it off. And so that has been the cry corner of the week, in my opinion, when it comes to SBR. I'm not here to judge or decide who is right or wrong, but I am here to laugh with you guys. Charlie's got a big grin.
Oh, I'm just chuckling. I'm just so glad I don't have a dog in this fight. I'm so glad
so funny.
that I don't have to pick a side. This is one of those times where you kind of love to be in media because there's like a bunch of different angles you could scoop or like take on this. I don't know. I think the only thing is, the cypherpunk in me, the on-chain maxi in me, doesn't like go to bed and like dream about the strategic Bitcoin reserve. Makes my number go up. That's great, but like, not why I got into Bitcoin. Not really my thing. But I think we have our mega narrative though.
So it does seem like Bitcoin Policy Institute open sourced their model, and then Dennis perhaps took it. And that is Bitcoin, open source material is okay. Open source code is fine.
Yeah. Massive breaking from Dennis's side. I don't really care about getting into the internal politics here. There are a lot of people who respect Dennis and a lot of people who disrespect him, say that he piggybacks off of other people's work. I don't really want to like speculate on that. I don't really care. People can kind of look at what goes on.
We're the peanut crowd here.
Yeah, I know. But it's just like, to me, it's just like
squirrel gallery.
Yeah. And I get like for the cry corner that being a fun story, but I do think that like, at least from where I'm standing, the more interesting question is this idea of like this kind of fragmentation within the Bitcoin industry between the people who are like, this is inevitable and also it's going to fucking juice my bags. So that's all I care about. And then the other people taking a more ideological stance and saying this is bad and we should not encourage it. I think this is where, with a lot of things with Bitcoin, I think this is the story of almost anything out in the wild too. Like this is just complex systems interacting with reality. It's like, where does idealism meet pragmatism? And what are the limits of the former once it meets the latter out in the real world? I will say, like, kind of to what Charlie's saying, like whether or not the government buys Bitcoin, I don't really care that much. I think to Nick Carter's point about it signaling weakness to the dollar, the U.S. has one of the most massive gold reserves in the world too. Like, does that signal that weakness for the dollar? Maybe this is a different consideration because Bitcoin is a much different asset for the digital age. But to me, it seems kind of inevitable that if Bitcoin continues to do what we think it's going to do, that the government wouldn't hold some meaningful position. Now, that being said, I don't necessarily want this encouraged because part of James's argument, and I think that this is overlooked with a lot of people, or at least not appreciated, is like the more you have state and corporate stakeholders from the US government to BlackRock to MicroStrategy owning large chunks of this asset, protocol upgrade discussions become much more difficult for two reasons. One, they're going to say, wait, hang on, some dude who's anonymous online with no profile picture, who like no one knows, is proposing something that's going to change a multi-trillion-dollar asset. That's not how these things work for the majority of the rest of the world. And also, number two, if there's ever a contentious fork and the network splits, ultimately economic nodes and people holding more of the currency have more sway over some dude like me in his basement running a node with a a paltry amount of Bitcoin, because they can go on the open market and sell one of the forked coins and they can sway market forces. Like if you end up having the majority of people's Bitcoin in the US held in custody at one of these companies, then they're going to make decisions for their customers. And they're going to just do whatever they think is best and what they think is in their best interest. They have absolutely no say. So if you've got like 2 million, like Coinbase has like 1 million Bitcoin in their wallets or something, you have like between Coinbase and like the US government and MicroStrategy and all the other ETFs, if you have like 2+ million Bitcoin held in wallets, you better be damn sure that whatever fork they want, they're going to get, because they're going to sell the other coins. And it's going to create massive selling pressure. It's going to affect the economics of the hash rate for either chain. And it's a double-edged sword. Bitcoin doesn't go. I have a hard time seeing Bitcoin going to 1 million and 10 million without this kind of thing happening. At the same time, if the participants in the network are overwhelmingly state type or mega corporation type actors, the network will bend probably towards those types of interests. So, yep.
We'll
that's
see.
Great. You can run your own node and have the code that you think is Bitcoin, but that Bitcoin's going to be worth like $500. I mean, that's exaggerating, but like,
as Paul Atreides, Mod Deep says, there's a narrow path and you can see through it. So there you go.
Musin al-Gaib. All right, gentlemen, anything else before we wrap up and go have fun and eat a bunch of good food for the holidays?
This is our last Mining Pod news roundup for the year. So the rest of the year, you'll hear recorded shows, which we have some awesome ones. Penny Ether, Pierre Rochard, ACS, and more.
Yeah, and we're going to do a quantum crossover episode.
Yes, we'll be dropping a quantum show from Bitcoin Season 2 on the feed. So pay attention to that. Thank you for following along with us during the year. If you enjoyed this, send it to a friend, catch up with the old episodes, and of course, like and subscribe to the YouTube channel and follow us on our newsletter.
I hope everyone has a Merry Christmas and a Happy Holidays. Be close to your loved ones. Tell your friends you love them. Go for a sleigh ride in the snow. Drink some hot cocoa. Put a little Bailey's in it if that's your thing. Have a good holidays, everyone. We'll see you all in the new year.